Everyone is telling you to buy now and you can refinance later. Well, I want to debunk that and actually double click on what strategically you should be doing in this market, because the question of whether or not you can refinance later is a question mark, right? That is the question. So, why are some of the reasons that you might not be able to refinance now and regret having bought today? So let's go through. What if you have variable income? I know that most people in the real estate industry who are paid on commission can relate to this, that our income might not be what it's been over the last couple of years. We know that we're going to continue to see an economic slowdown. Is your income based on variable pay? Is it based on hourly wages where maybe your hours aren't guaranteed, or it's based on bonuses or commissions? Those kinds of things can change from year to year. Also, self-employed, you guys have the ability to not only write off all of your gross income, but your income is delayed. So in the spring of 2024, we're going to be talking about 2023. Now, you might have had a great 2022. So I might want to time when you purchase based on when your taxes are going to be coming out. And if you're not making, or you project you might not make in the future what you're making today or what you've made in the past, you might not be able to refinance. Another aspect of this market that I've been really watching is our appreciation. Interestingly enough, interest rates have been high, yet home values continue to go up. But that statement is not universal. In fact, there are some areas that are seeing a depreciation in their home values or a softening of their home values because maybe they had a massive run up in home value appreciation during the pandemic. Those areas or even neighborhoods within hot areas might not be seeing the same thing. And if you purchase a home and you put, say, 3% down, and you see your home values either level off or go slightly down, you might not have the equity to refinance. Another situation along the same vein is, what if you took down payment assistance and now not only did you get a 97% loan to value putting 3% down, but you got a 3% down payment assistance, which was really 4% because they charge a point, so your loan to value is at 101. When you refinance, most down payment assistance programs require that you pay off any silent second or remaining balance on a grant if their grant is not immediate. Well, that is going to either both cost you money and or put you in a position where you don't have the equity in order to refinance. You might also have a credit ding. I mean, who's to say? Have you ever had a medical collection hit your credit report? I mean, that happens at the worst times. Or maybe you forgot to pay that one singular bill. Maybe you went in and got a store credit card and you forgot that you got the store credit card, but they never mailed you the bill. You forgot to pay it. Now all of a sudden you saved 20% in the store, but you paid for it with a ding on your credit report and a lower credit score. I mean, that's a real common occurrence. In addition to medical collections, if somebody reaches out, sends you a bill, you never got the bill, and then they put it on your credit report. Now, I could talk all about credit reports. That's a different video. But right now, those things happen. Life happens. And is your credit going to be what it is today, next year, or the year after when you want to refinance? We don't necessarily know when rates are going to come down. And you might not necessarily know your specific financial situation when that happens. Because honestly, we can't say when rates are going to drop. We thought we knew. We had a clear outlook based on dropping inflation. But with world events, that didn't happen. With the price of oil, that didn't happen. With bank failures, that didn't happen. And even this morning, retail sales came up 0.4%. I mean, pushing rates up again, right? So when rates aren't behaving the way we might assume they will, we don't know when rates will drop. So instead of being pushed into a concept of buying something today and refinancing later, I want to talk about strategically looking at this purchase differently. Stop focusing on the interest rate. Start focusing on, does that monthly payment fit inside my budget? And does this purchase align with my financial goals? Does this purchase take me towards multi-generational wealth, financial stability and security, augmenting maybe my 401k or my current retirement assets? Does this purchase give my children somewhere concrete and stable to be and to grow and to thrive? Does this purchase provide me a forced savings plan of principal reduction? And yes, regardless of short-term appreciation volatility, does it give me long-term appreciation opportunity? Looking at this purchase more from the perspective of payment and strategy versus interest rate and stress. Nobody should be stressing or pressuring you in to purchasing today and refinancing later. There was a saying early on in this change of market saying, marry the house and date the rate, which I never used and never liked. It assumed that this dating period was a fixed period of time, that don't worry, you'll get to the other side of this. The bottom line is we don't know when that will happen. Do we all hope it happens? Yes. But I don't bank my financial plan on hope. I bank my financial success on strategy, right? Because bottom line, real estate provides wealth in a way that most people will never achieve. Unless you're a YouTuber or you're creating the next electric car or the rocket to the moon or the app that's going to take off, this real estate might be the very thing that sets you apart on your financial journey. But don't do it banking on the fact that interest rates will come down and when. While you're looking at the strategy of buying now, I want to talk about a few quick things about strategy. This fourth quarter, 2023, specifically offers opportunities that we have not seen for the last couple of years. We are starting here in the Denver market. We finally ticked over more active inventory than we had last year. You can't say that nationwide. That's going to give buyers the opportunity to get in when less buyers are coming in. There is less mortgage applications than we've seen in decades. Yet we've got a little bit more inventory. Those sellers who need to sell going into the holiday season. Now, some homes, when they're priced right and staged right, are going to go very quickly. So they might not give you as a buyer the opportunity, but those homes that don't will give you the opportunity to negotiate. And you might want to look at a permanent rate buy down instead of a temporary rate buy down. But ultimately, making sure that that payment fits in your budget. You might also want to take advantage of income opportunities in that house to offset the higher monthly payment. What about that new program that Fannie Mae and Freddie Mac just rolled out where you can put 5% down on a 2, 3, or 4 unit property? That is money. What about house hacking or buying a house that has an auxiliary dwelling unit in the backyard? Or being able to buy a house that you can split use and have either short-term rental or mid-term rental down in the basement. These are the conversations I'm having with our clients every single day. Because if people get used to higher rates, or if rates go down and we hit the spring season and more buyers come to market, and we have not enough inventory to satisfy demand, you will see home prices continue to go up further. Because at some point, regardless of what the interest rates are, people will need to move. They need to move. They have baby being born, death in the family, a marriage to celebrate, a divorce. People will continue to move in this market. Taking advantage of the small windows of opportunity like we have right now in the fourth quarter might provide you incredible lifetime wealth, but only do it if it makes sense for you. Nicole Ruth with the Ruth team. I hope you guys are having a phenomenal day, and I'll look forward to talking to you soon. Bye-bye.